Let's talk about why the Fed is talking about more rate hikes. Bitcoin's fundamentals continue to get better and better and better. Its hash rate continues to go up and up and up, never seemingly to end. And you know the reason why? Because people believe in it. The miners believe in it. Miners are not going to go away. They just keep on hashing, and the network overall gets stronger. Addresses go up. Even Lightning Network usage and liquidity both going up by leaps and bounds, right? So basically, we're right between, obviously, 91 and 95%, right? But come in a few years, in a couple years, 95% of Bitcoin supply, okay, will be mined. 95%. That means 5% left. And then you go 10 years out, we will be at 99%. Okay, so think about that. In the next 10 years, 99% of Bitcoin will be mined. And then things get interesting. Then it's going to take another 12 years to mine that last 0.9%. And then it starts flying, right? The last 0.1% will take forever and go all the way until 2236. And I don't think any of us will be around by then. That's when all Bitcoin will be mined, every single last sat, and there will be no more to be mined. So until then, the miners are not going to go away. They already know it's so scarce. Everyone's fighting for the last few percent. Think about if there was a graphic like this for gold or oil or any other commodity that we have. Think about what that would do to the price of those commodities. They would be skyrocketing. If we knew for sure that we already drilled, let's say 95% of all available oil on the planet, do you know how much a barrel of oil would be? So people are not paying attention. That is happening with Bitcoin. It's set by code that won't ever be changed. We're approaching that 95% mark already. There's not enough Bitcoin out there for all the millionaires in the world. So think about that. Every millionaire on the planet wanted to buy and hold one single Bitcoin, they couldn't do so. Short term. Still got a lot of predictions like this falling wedge pattern, which is actually pretty bullish. So maybe Hong Kong, maybe tomorrow we get pushed past it, or the debt ceiling crisis is finally over. We get pushed past it, right? Maybe Ripple winning the case will push us past this. I mean, we're a little bit boring, still going sideways. No movement for about a month or so, which in crypto time feels like a year already. I know that. But Bitcoin is still doing very well. You know, what we really care about is this. As we approach that halving event, as the inflation rate of Bitcoin gets cut in half once again, right? What happens afterwards? Really good things. This is why we're in it, and why we're not going to give up, and why we're all going to continue to DCA and hodl for life-changing wealth. A Fed president out of Cleveland, Fed Mester, that said, I don't really see a compelling reason to pause rate hikes. So she's talking like, hey, why are we talking about pausing? We're just going to keep on going. That's what it sounds like, right? I think this is what's really scaring people, not so much the debt ceiling, right? And if you're looking at the CME prediction, well, I mean, I think she has it right. I mean, over 60% chance that we will get another 25 basis points. After the last FOMC meeting, this was like 95, 97%, no more rate hikes. And since then, somehow this has reversed, and now we're at like 61% for another rate hike. And only 40% saying no. Somehow the market have just forgotten about three of the banks that failed, and if you look at the size, probably three of the largest, among the three of the largest banks that have failed within the last decade, at least, right? So it seems like the market has forgotten about that, forgotten about all the economic data that's coming in weaker and weaker and weaker, right? What about all the layoffs that's still happening? There's a lot of stuff happening right now due to the rate hikes, and it's not going to stop. So unfortunately, I think this is, excuse me, this is what's causing the sell pressure today, that, yeah, there's a real possibility of more rate hikes coming up, right? And economic data is not doing good. There was some economic data that came out of China, and that was not good. So it shows, like, basically, this is not just a U.S. thing. There's a global slowdown, right? The U.S. is already in recession. Many others are in recession. UK just entered recession, and China is probably in recession. Every single country is in recession. And here's the thing. It's artificially created. The reason why is because of all the money printing. That's the thing. People still don't realize. Why are we in recession? Why does the Fed keep raising rates? You take a second. If you don't understand, take a second and think about it. You know, everything was doing good. Why all of a sudden we are in recession? Why the Fed has to keep increasing rates to slow down the economy? It's because of all the money printing. Because of all the money printing caused hyperinflation pretty much. Inflation started skyrocketing, and that's why every country around the world started raising their rates to combat inflation. But especially when the debt ceiling is about to be lifted. That means there's going to be more printing. That's the thing. It's a never-ending cycle, and that's why the market, the U.S. market, and Bitcoin and crypto, it's kind of like in limbo right now, not knowing what to do. But hey, we got that. We got that to look forward to. The debt ceiling crisis being lifted this week. And also, of course, we still have Hong Kong. That's coming up tomorrow, June 1st, when they will open up. And right now you can see they are just going all out. So Hong Kong and EAU Central Bank collab on crypto rules. UAE is very crypto friendly. Hong Kong is about to be very crypto friendly. And China is allowing Hong Kong to go forward, allowing retail investors to invest in Bitcoin, Ethereum, and many other crypto, right? And it's just the beginning. They want to make Hong Kong into like the Web3 hub, right? So that is coming tomorrow. Hopefully that offsets this new notion that the Fed is going to raise rates even more. Look at something like this. Mortgage demand drops to the lowest level in 3 months. I mean, seriously, who's going to be buying a house when the mortgage rate, a 30-year fixed mortgage rate, is at 6.91%, 7%? It's ridiculously high for the last, how long? Last decade, we've been, sub 3%, sub 4% at times. It was like 2.25 or 2.5%, right? Now at 7, of course, demand is going to drop, right? And every single measurable economic data that we're receiving these days show things are dropping, softening, right? But has the Fed gone too far already with the rate hikes? So whatever damage that has been done, we don't actually know, because they're all, all these indicators are lagging.